Good morning. Today is Wednesday, March 6th, and I have an E-mini chart up here on the daily chart. Then I want to go through two stocks, actually. That one I just got filled on, and I'm looking to get filled on another one. So I want to tell you about two new trades that I'm looking to open up. Today opened up a little higher, right? As you recall, yesterday opened up higher above that 15.28 3/4 right here, the middle line, right? Opened up above it, never looked back, continued to roar higher. Today opened up higher. We've almost filled that gap. We've come down a bit here. So what you'll notice here on this chart, I've got three white horizontal lines on my screen. One represents, the middle one represents the yearly high, the old yearly high of 15.28 3/4. The upper one represents yesterday's low of 15.32, and the lower one here represents the high before we broke up through the high, this March 4th's high of 15.26. So I believe between 15.26 and 15.32, right in these three white horizontal lines, the market should hit some major support. The market should probably bounce off that level when, in fact, the market comes back down. Okay? Again, remember, old resistance becomes support when broken, and the market is certainly broken up through these levels, and these are the big levels. Again, yesterday's low is one level. The old high of 28 3/4 is the next level. And then right here, this high, the March 4th high, right in this level, will act as support. Okay, so that being said, just to let you know, what is it, 4.5 years ago, when the S&Ps, the E-mini S&Ps all-time high, I believe, was what, 1561-ish, 1561, 62. That's the all-time high in the S&Ps. So we're only 20 points away from that now. So I do suspect that the market will run up and try to test those levels here. Okay. Two trades that I am looking at now. All right. Wynn Resorts in Las Vegas looks pretty good. This screen represents what? The weekly up here. And this is the daily chart. Now take a look at this. On the weekly chart, a few weeks ago, right in here, the bars turned from red to green. So an uptrend was officially established when they turned green up in here. Look at where the market's at right now. The market is back to the 50 exponential moving average. We're in the blue action zone. You see that? The blue action zone, 50 exponential moving average, which is also sitting in between the gray action zones. Okay, so it's on a weekly chart, this looks like a spot where the market should, in fact, bounce. Okay. You could be buying it here, but what I'm doing is I've got a buy stop order sitting out. Now, let's take a look down here at the daily chart. This is, as you already know, a 200 exponential, the 50 exponential, the gray action zone, okay? Look at these white bars. These white bars, the second one, right, the middle one represents an outside vertical bar, but it closed in the mid-range, so that's not telling me a whole lot. Then yesterday was actually an inside vertical bar, right? The high was lower than the prior bar's high, and the low was higher than the prior bar's low, right? So I'm looking for the market to bust up through the high of yesterday, which would confirm that the market should move higher. So my buy stop is at 17.53, 20 cents above 17.33, okay? So that's what I'm looking to do here on WYNN. And then RIG, right? TransOcean. This is a trade that I actually was executed this morning on. If you see it, take a look at this. The weekly chart just a couple weeks ago turned from down rather to up right in here. Now, granted, I know we're sitting between the 50 and the 200 on a weekly, but it looks like the market's trying to move higher. All right, so on a daily chart, well, this has been up for a while. Okay, up, came down. Now we've pulled down. This is what I consider a rather deep pullback, right? Let's draw some fib levels here. All right, we're going to measure from this low up to this high. Let's get these right. Put them on the low right there. Now take a look at this. So we're looking at all these factors here, right? The weekly's up now. The market has pulled back from this high down into the zone, right? The gray action zone, 200 exponential moving average. We got a price pattern here, never executed a trade, continued moving lower. We had a nice bar here. I didn't notice that. That would have been a buy above the high of that bar. A buy would have been right above this high here, which is made on February 26th, taking out the high 51.61 really was a good buy, but I missed that. I didn't notice that. Market has run up. You got an inside bar yesterday. Yesterday was an inside bar, so the buy today was 53.43, 10 cents above yesterday's high. 53.43 today opened up at 53.30 and traded up through it. So far, not a bad trade. Again, long at 53.43, and we're up at 54.21. High of today is 54.30, so almost a full point up on this. So we'll take a look at this, and I'll talk about, well, my initial stop loss on this, I'll tell you, is directly below the low of the inside pattern. So my stop is at 51.81. 51.81, long at 53.43, and I will outline this more for you tomorrow. I'm looking for the market to bust up through 54.36, this high here, and then we've got a ways to run to try to retest this high. And I'll give you the profit objectives and everything tomorrow. So hope that helps, and have a profitable day, and I'll talk to you tomorrow. Bye for now.